companies. Lucid, the challenge, and the stock was down today, is they said their annual production guidance is going to be 67,000. I don't think that was a surprise. What was a surprise was 34,000 reservation holders, which I believe was down from 37,000 a quarter ago.
That number's going the wrong way, right, Travis?
That's a 10% decline in one quarter. That's a big drop. So do we see demand for these vehicles fall simply because buyers can't afford or don't want to spend the money on vehicles like this? It's an open-ended question right now. And the fact that their reservation holders, the number of reservations is falling, I think is not a great sign.
You know, to get your place in line, that's $1,000, right?
Yep.
And
what the Rivian is, and
it's refundable, which is as it should be, right? I wonder if some of that impact isn't people that are like yourself that are gone from, hey, you're going to get it early next year to you might get it late the year after, and they're like, I could use that $1,000 for other things right now.
Absolutely.
So maybe they still have an intent, but it's gotten to the point, well, you know, that it's like buying the fast pass for Disney and they tell you, well, you're still going to have to wait an hour and a half, right? It's like, no, I'm not going to spend that money to not really feel like I'm getting an advantage. So
yeah,
maybe
what's the point of standing in line if I'm going to be in line when their production reaches 200,000 units a year?
Right.
There's not going to be a 2-year wait 2 years from now.
We've seen the story play out too many times in other industries to think that it's necessarily going to be different. I just want to caution investors. So yeah, we got a call out from somebody yesterday on the YouTube asking for this one, and we missed it. We didn't see your comment until after. So hopefully you're watching today.
I'm going to go through the numbers here for Rivian based on the numbers that we talked about. So is the backlog growing? 114,000 R1, so that's R1T, the truck, and R1S, the SUV, reservation holders as of November 7th. That's up from 98,000 on June 30th. So that is a positive sign that the number of reservation holders is increasing even faster than they can make vehicles.
There you go. There's the slide.
There's the numbers right there. 15,000 vehicles produced. And the big number that you still want to keep an eye on is that $14 billion number. $14 billion in cash. That's down from $15 billion a quarter ago. So they're burning cash at a really rapid rate. So the question is, can they get
that's expected, Travis, because that is
expected. That's why we're not valuing this company based on free cash flow, because they're going to be spending a lot of money, both now ramping up production, but then the next step is building out this facility in Georgia, which they said is they still expect to be operational in 2026. We'll see if that is the case, but they're running into some roadblocks there with the agreement that they had with the region and basically the subsidies that were involved. So that could be a little bit delayed. But generally, from a production standpoint, they're still shooting for 25,000 vehicles. They made that prediction early this year, and I think it's generally a positive sign that they're still sticking by that they're going to work through any challenges that they had. That would be a run rate of about 10,000 vehicles this quarter. That's a lot of vehicles. So
yeah, that's a step in the right direction. And it's not that long ago that that's all that Tesla was making too. But the hard part is getting from where they are now to getting to that, and then to 100,000, and then to 1 million a year, right?
Right. And they're going to need to expand their capacity, but 25,000 a year. Well, let's take the 10,000 per quarter run rate is about 40,000 units per year on an annualized basis. Their current facility can make about 150,000. I think they said 200,000 with an expansion. So it's conceivable that they could get to that kind of run rate maybe late next year, sometime into 2024. That would be, I think, pretty impressive. Now you've got to build that Georgia facility and build your whatever the R2 package is. I think that's going to be maybe even more challenging than building the first one. The other thing that they talked a fair amount about was the delivery truck, the EDV that they're delivering. They still have a 100,000 unit order from Amazon, but there has been news that they are now selling those to other third parties. So I think everybody thought that was an exclusive deal for a period of time. Maybe it was, maybe the terms were changed a little bit, but we're starting to see those in the wild. That's one of those things where they can build a platform that I don't know that anybody else can, because they can start from scratch and they can build in all the tools. I mean, when you're a brand new manufacturer and you're working with, is it the biggest retailer in the world now? If it's not, it's close. You can see exactly what does a company that runs at that kind of scale need and build for that, and then start to offer some of those services. And that's what they're doing is they would have service software as a service with these electric delivery trucks to smaller delivery companies. So that's potentially a really interesting business for them, and something that they're maybe not going to have a ton of competitors in. I mean, if you've seen UPS trucks around, they're still the same trucks that were made 40 years ago. So there hasn't been a lot of innovation in that space in a long time. This is a company.
You know what the innovation's been in those vehicles? In the fuel sources, going to lower carbon fuels, looking to electric vehicles, that sort of thing. But like the actual operation, you're right. I want to caution people, Travis, again, because you look at the market value for Rivian stock, and it's clear investors are pricing in that as part of its future. It barely exists right now, and it's not anything that's making the company, a material amount of revenue or cash flow. So,
are you talking about the electric delivery vehicles?
Yeah. So, I mean, in terms of you just be careful about valuing those sorts of things too much is the point. Travis, we want to take a look at cash flows, cash burns real quickly.
Let's look at it.
I got it right here. I'll pull it up for us. So, operating cash burn was about $1.4 billion. That's double where it was a year ago. Again, not unexpected, because again, using Tesla is kind of the test case. I know I said it's not going to be the next Tesla, and then I'm telling you to use Tesla, but there's an operational cadence that we can use that's helpful. And part of that is it spends the CapEx and expands a facility, and then adds operating expense as it's building inventory and it's bringing it online before it's generating cash flow from selling the vehicles, right? So this is not unexpected that this has happened, right? We're also seeing CapEx actually came down, but again, we're continuing to see CapEx spend. Free cash flow, I want to talk about this just really quickly, was of course negative, about $1.7 billion. That's accelerated largely because of the increase in operating cash burn. All expected. The key is, if you're going to follow this company, if you're going to invest in it, Travis, just like we've talked about, it's going to continue to burn through cash. We know it has, what, $14 billion on its balance sheet?
13.8, yep.
Yeah, 13.8 billion. And it also has a revolving debt instrument that's tied to assets, right? So as it scales up and acquires assets, it'll have access to more and more debt, right? So it has ways to access capital. But the catch right now, Travis, is the balancing act, right?
Yep.
Of careful capital allocation, growing your operations as you're scaling up your ability to make and sell more cars.
So let's go through some of the things that we talked about early on. What are we looking for? The number of reservations is growing and growing more quickly than they can make vehicles. I think that's a great sign. Yeah.
As opposed to Lucid, where we're seeing deterioration in that metric.
Clearly, the market is not in the mood to fund companies like this in perpetuity.
The market needs to see scale, needs to see scaling up, selling vehicles, continued demand for more plants like the Georgia plant, right? And if the market sees that and sees good economic activity, then the conversation changes. But as the business exists today, it's not going to happen.
All right, my final thoughts on Rivian and Lucid. Lucid, I think that was a pretty bad report, even just on a surface level. You just don't want to see reservations going in the wrong direction. Rivian, I think, seems to be going in the right direction. I'm interested to dig in this a little bit more and see what the challenges are for the company, because, are we clear sailing on them continuing to scale the business in 2023 and into 2024? I'll put my emotions aside as a reservation holder and getting pushed back there. And I'm not a shareholder at this point, but I am intrigued by Rivian, because I do think the disruption in the auto space is these business model disruptions. It's not that they're making an electric vehicle that General Motors can't make.
Right.
They can make the same vehicle, but they don't have dealers. They don't have that segment of the market, of the business, to deal with. They can rethink servicing vehicles. They can rethink what our software looks like. They can rethink all kinds of things that General Motors just structurally as a business can't redefined, and that could lead to fundamentally higher margins long term. That's why Tesla has better margins than traditional automakers today. We'll see if that continues, but that's why I think this is an intriguing company. If I think that the risk reward is there and we get past this kind of can they survive point, then it's much more intriguing to me.
And we're getting closer. My final thought is just agreeing with everything you said, plus one addendum. We've seen Tesla also be able to hold those margins, not just because of the difference in its business model, which is meaningful, but also because it really hasn't dealt with any competition.
Mm-hmm.
That aspect is going to change. Now, at the same time, costs are coming down for like things like batteries. It's going to help absorb some of that competition too. But 3 or 4 years from now, when you're seeing the largest automakers have meaningful, real high volume EV products and they're competing more on price, that's when we're really going to find out the kind of margins that these pure EV startups today that are just pure EV companies with a differentiated business model, then we're going to find out what's the difference in the margins they can get and the difference in their operating leverage versus the traditional Fords, GMs, and Hondas.